Good morning, everybody. Probably afternoon for a lot of you. I'm gonna let some people flow in here. Come on in. I'm gonna do a quick audio check. Is everybody able to hear me okay? You just put up a Y or a 1. I greatly appreciate it. Very nice. Thank you. Holly. Yeah. Little Bandu to wake up in the morning. Gets the blood flowing. Or something. Slapping my knee, tapping the foot. You know? Sam Rendo, morning to you. It's 4 p.m. in Kenya. It's good to have you here. For all my U.S. folks, happy Thanksgiving. Thanksgiving week. We're doing some celebrating myself. Not that you all are here for that and you don't care, but hope you all have a good holiday week. All right, we're getting started. Good morning, good afternoon, good evening, ladies and gentlemen, wherever you are in the world. I hope you are doing well. And just a reminder, I'm not a financial advisor. This is not financial advice. Information on this channel is provided for education, informational purposes only, without any expression or implying warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. Pause the stream, read through this. Good stuff. All right, let's get into it. All right, NASDAQ, as always. So, going through, and just a gentle reminder, as always, that we are looking for setups. I'm looking for 3-day opportunities. All right, for anybody that's coming in that's new, we're looking for 3-day cycle, 3-day signals, and then weekly templates. And mainly, we're going to be focusing on, like, you know, the weekly templates and things, considering today is Wednesday, Monday's always day 1, Tuesday's always day 2, Wednesday is always day 3 within a weekly template. Right? Looking at 3 different categories of opportunity. Weekly template being Monday, Tuesday, Wednesday. 3-day cycle being, could be any days of the week. It's just dependent on what day restarts the cycle. Day 1, day 2, day 3. And then the signal days. Pump day, first red day trade. A plus B equals C. Kind of the way I try to explain it. We're going to start off on the NASDAQ. And do you all want to see the tips and tricks again? That slide first. Do you want another reference for that? Should I go through that, or are we all good on that? Nah, we're just going to go through it. All right, I got the playbook here as a good reference, as always. And we're going to get up the... There we go. All right, so as always, looking at the 3-day templates, these are the tips and tricks. This is the pieces of the puzzle that I'm looking for in order to identify which template we're currently in. It kind of is just a guide, a description of each one. And I still, y'all are going to make fun of me because you all told me last week, why don't you just redo it so that you can, yeah. And I still didn't do it, so whatever. All right, 1 through 7 is all of the templates. Number 6 and number 5 are for later in the week. 1 through 4 and 7 are for what we're looking at now. Market closed outside of the opening range on a Tuesday. Basically what this is saying is just an opening range breakout. All right, you get Monday's range, Tuesday closed outside of Monday's high or Monday's low, and that could turn into an opening range breakout for either a breakout pullback trend or breakout lower low on the inside reversal back towards the end of the week, or the other side of the range, excuse me, unless the breakout fails on Wednesday, which is that one that I just described right there. Market closed as a failed breakout on Tuesday. So we could have Monday's range. We could have Tuesday putting in a peak formation, either high or low. It doesn't matter which one. I know I'm going to use a bunch of high examples, but they put in a peak formation high, pulls back down on the inside of Monday's range. We might be looking at a reversal back down towards the other side of the range. If Monday's breakout fails and then Tuesday's breakout fails at the other end of the week, high potential for parabolic trend. This is a 3-day rectangle. So you have Monday, let's say Monday breaks out of Friday's high and fails, and then coming into Tuesday, they break down below Monday's low and fail. Basically, all this is peak formation high, peak formation low, 3-day rectangle, consolidation in the middle, and then we can look for explosive moves coming out of that consolidation. If Tuesday hits both, this is an outside day. If Tuesday hits both sides of the opening range, parabolic trend trade or possibility for that increase. Monday's high and low, you get an outside day on a Tuesday. They spike up, they spike down, they pull back up on the inside, and then we might have a trade the following day. So that leads me to the playbook. Think about all of these examples. Breakout pullback trend, breakout reverse, maybe a first red day or maybe a first green day. Spike both sides of the range, maybe an outside day, outside day. That comes to the playbook. Again, signal days, 3 days of breakouts, 3 sessions of breakout. Outside days, spiking both sides of the range, peak formation high, peak formation low. Now, I don't have them listed here, but this could be over the course of 2 days as well. Spike the high, spike the low. Same template. First red, first green days, again. Breakout pullback days, failed breakout days, first red, same thing. First green day traps, breakout fails, but it rolls over the next day, trend trades. First red, breakout, high of week, drops back down, good stuff. And then first red day traps is the opposite of first green day traps. We're in a strong breakout market to the upside. You get a first red day that does not eventuate down, but actually goes vertical to the upside. Same thing here, all right? So those are the types of opportunities that we're looking for, trend trade opportunities throughout the week closes. Anyways, let's go back to the chart. So now we've pre-identified what are the templates that we're looking for. So now I can go through the 5 pairs and put all of the details up there. Just because I'm putting details up on the screen does not mean that that is the best candidate. It just means that I'm trying to identify which details are there so that at the end, I can then go back and identify which one is the best candidate. All right, so let's get some details up on the screen. I'm going to start with the NASDAQ, as always. Monday was the opening range for the current week. They made a high, they made a low. Let's go down to a 15-minute chart because that's where I do all my analysis. They put in a peak formation high, they put in a peak formation low. Basically, the breakout did not fail on Monday. It did on Tuesday, but this is still peak formation high, peak formation low, and we're still sitting on the inside. So a bit of an odd variation. Not odd, different. But the concept is going to remain the same. The fact that we're still on the inside of this peak high, peak low. So this is peak formation high. Oh no, there we go. Peak formation high from Monday and Tuesday. So this is going to restart the cycle on Tuesday. The breakout that, I wouldn't even really call it a breakout. We had an inside day and a breakout. It's very consolidated. So what template are we currently in? This is a 3-day rectangle. Not really tightly wound, and a fairly wide range on Monday. So let's go and take a look at Tuesday. They pumped it back up, maybe a first green day. which really I think this might be, yeah, this was first red, immediately followed by first green. Now we're dumping back down. This is a little bit of a tough read. I think that I might be definitely passing this one, unless this first green plays out okay. All right, so with this first green day and a peak formation being made at the low of the current week, what I can do right now is take this close from yesterday, project this across. I don't know why my other lines are purple, but it's fine. All right, so with yesterday's close being right here, if this first green day turns into a trap, this is always going to be my most important area. If this first green day does play out, what do I need to look for? What do I need to be doing? I need to be tracking market structure on the day. We made lower lows and lower highs throughout the day. We had our end of day consolidation from yesterday. So they went from the high back down towards the low. You can kind of see the little peak formation down low. Let's go down to a 5-minute chart and frame the day. All right. I'm just going to look at the very end of this move. We were making lower lows and lower highs. We had a 2-bar pullback. That was not, this is all on the inside of that 1 bar's range. And then they continue to go lower. So I think the last place that they've made a high and a low was here. Yeah, everything that I'm seeing here, I'm not really caring for. I think I'm just going to move on. Good. We're moving on. Nothing here is standing out to me. Let's go to US 30. All right, so I got some details up on the screen from yesterday. Looks like we got 3 days of breakouts. Let's just restart this. 3 days of breakouts coming back from last week. So Thursday, Friday, and then definitely Monday. We had these 3 sessions of breakout on Monday. On day 3, did not reverse back down. Okay, and that was the opening range for the week. Then we have a outside day. They spiked both sides, and then they closed on the outside of the range to the upside. Let's go over here. We'll do this. So if I'm trying to identify what kind of template I'm in, Monday, opening range. Day 2, Tuesday, outside day, spike the high, spike the low. We've closed in breakout to the upside. So what does this do? This triggers breakout traders in. Again, Stacey Burke talks about this all the time. That's where I learned it from. Triggers breakout traders into the market. All time frames are involved. That's where all the big money is at. We're either going to break out, pull back, and trend, breakout, reverse, or stay inside of a trading range. We're not on the inside of a trading range right now because we're in breakout to the upside. Opening range breakout, right? So I'm going to take this level. I'm going to project it across. And now we've traded back down into breakout, pullback kind of territory. So if I was going to take this trade, or if I was going to look for this trade, I would need to see lower lows, lower highs in a short squeeze, which kind of looks like it already happened in the gap time. So the way this is consolidated down low, you can see the little 3 push pattern here. If you're trying to take notes of like what is a good short squeeze or a long squeeze pattern, the fact that we've made lower, hey Joseph, good to see you here, lower lows and lower highs, and then we spiked up like this and made this higher high. The way that they trade back down, this is the short squeeze pattern. Now this is in the gap time, so I'm not interested obviously in the gap time. It's not even close to 9:30. But this is the short squeeze pattern. They spike up, they make a higher high. This is the first mouse, trapping everybody long early. We got to go back for the money and convince people to go short. So it comes back down, and then there's the engulfment, obviously, to go back up. Now, this, like I said, is in the gap time. So I need to figure out, do I want to actually take this trade today or not? Or what kind of, setup would I be looking for? Well, if I want to take this long breakout pullback, I want to be trading from the low of the day. Or the very first pullback, which would have been right here. So really probably not my cup of tea. Now, if we do get back up here on a Wednesday, let's say that as far as timing goes, let's say that we get back up there. Maybe this is peak 1 back to the high, peak 2 back to the high. I'm just listing scenarios at this point because I can't see into the future. And then we get peak 3 to the high. It triggers the high of the day and rolls over and breaks down. Well, now I could take that trade because it's from the high of the day. It's doing things that I want to see. Yeah, let's see if we can find something better set up. Cam, why is the outside day considering the gap opening? What do you mean? Monday is the opening range, always. Tuesday, we hit both sides of the opening range. We hit high, we hit the low. That's an outside bar, essentially. They hit both sides. But we closed in breakout. Hopefully that answers your question. Oil is coiling. Cam, can you add an arrow to brush? You can add an arrow to the, no way. Oh, that's crazy. You know, you learn something new every day. Good stuff. Appreciate you. Let's see. Tuesday didn't hit. It did. It hit both sides. Tuesday didn't hit the low of Monday. That's the low of Monday right there. The day opened. When do you start the cycle count? Yeah, YM is US 30. YM is US 30. I just use this for, I use the US 30, all these different ones for my analysis because the levels are more accurate. Futures markets close earlier in the day. So the previous day's high and low and the close looks very different on a futures chart. So I use these because it has all of the data is different. All right. So this would have been perfect. Again, if you're taking notes on like, hey, what is the perfect template or whatever, this breakout and this pullback, Asia makes a higher high. All right. Remember, I usually I'm a fanatic for this silly phrase. Asia makes a higher high. London pulls back. New York is the trade. If we were going down and we were broken out to the downside, Asia makes a lower low. London pulls back. New York is the trade. So Asia makes a higher high. London pulls back. Low of day. Breakout pullback. Breakout here. Pullback here. This is perfect. Absolutely perfect. Picture perfect. It's just in the gap time. So we'll see. Maybe there's going to be continuation up through the high. Would I be willing to take that, though? Do I think that's a best trade? 90-10 opportunity? No, I think that my best opportunity would have been from down here. Let's go to the Russell. I'm trying to go slow. I'm trying not to just rush through this because I want you all to get as much out of it as you can instead of me just assuming that everyone understands what I'm talking about. Cam, can you elaborate on what are... Okay, so high probability... It's not necessarily high probability engulfments, all right? So when I say that I'm trying to get in on the first pullback or on the peak formation, if you got your... Oh, no. Okay, so I got to remove the arrow. Right. Let's go back. There we go. So if you have your high and, excuse me, high and the low of the day, or high and the low of the previous day, it doesn't matter which one. Levels. That's what I'm mainly referring to. I've got levels, either high and low of the day or high and low of the previous day. And then we get up there and we trigger one. And I get a trade. Let's say that I'm getting in, they've extended the high of the day, they trade back up into the high of the day, and they engulf down. All right. So I'm getting in on the right shoulder of a peak formation high, or I could be getting in on the right shoulder of a peak formation low down here. All right. So that's one entry that I'm willing to take. Now, this might be a very aggressive entry. They may have not made a lower low yet. It's high risk. Not necessarily high risk, but I would say it's not high risk, but the probability is a little bit lower. I'm going to use much smaller size. Okay, but now if it continues to confirm my trade, let's say that they break up, maybe this is the higher high and it stop hunts back down in 3 pushes, and then I get another engulfment to go back up. So breakout, and then now I have a 3 push pattern, breakout pullback, and then I have my engulfment. This is like my first pullback, and then now the trade is likely to expand a range going back up in the other direction. Less confirmation. Thank you. Holy cow. Words, caffeine, good stuff. So this is my first pullback entry that I like to take. I think it has a much higher probability of success. I'm paying for a little bit more information. This, on the other hand, is still high probability, but I have less confirmation, so I'm going to put less size on it until I have more confirmation. But yeah, that's what I'm really referring to. Hopefully that's a decent elaboration or the answer you were looking for. Okay, let's take a look at the Russell. Man, these index templates. Okay, so opening range fairly wide. We had the gap. Peak formation high was made on Monday. Boom, boom. Then we've dumped it back down, put in peak formation lows on Tuesday. And it looks like we've been holding this range down here. I know holding this range is not a trade setup, so I'm just looking at the overall pattern. So peak formation high, peak formation low, day 1 of the 3-day cycle. Was this a first green day? No, it was not. I'm going to focus mainly on peak high, peak low, and the pattern that's forming for today. So coming into the New York session, this was the high of the day. And then this is the high of the previous day. Asia's made not even a higher high. London has. We pulled back a little bit and gone a little bit higher. Again, I don't think that this is probably going to be my best trading candidate for the day. We've been in breakout to the upside. Breakout, breakout, breakout. We triggered a low, consolidated down low. This could have been a dump for a pump. But it's certainly not in a template that makes me comfortable or happy. That's just me being completely honest. Let's confirm. New York dump, New York pump. Yep. Oh, okay. Hey, so I've got some notes still up here from oil yesterday, and it looks like this first red day ended up playing out, but in the afternoon or in the gap time, which happens from time to time, where it doesn't happen in our session. We got a chop session on day 3, and then that continuation down after first red day. So let's get rid of all this. Was this at the high of the week? So, yes. Friday, high of current week. They break up above Thursday's high in reverse, giving us day 1, day 2 of the cycle. And that was also our first red day for the first red day trade yesterday. I know I just deleted all this, but I just wanted to walk you all through the thought process. And then on day 3 comes the reversal trade back down to previous day's low. It just happened in the gap time. Now, right at the end of the day, this reverse. So again, we have peak formation high, peak formation low, and this actually spiked up and spiked down in the day. So we got peak formation high and low, and then also peak formation high and low. So these are our 2 main peak formations, this high up here and this low down here. And this pattern in the middle This actually is making me a lot more excited to trade oil than any other patterns. This reverts back to day one. Okay, so this idea is that peak formation high, peak formation low, consolidation in the middle. Let's figure out what kind of consolidation we're looking at. We started in Asia, then we get a breakout, and we're continuing to have rectangles. Are we going to continue to ascend? Or is it going to work the high of the day and break down? That's my only questions. In fact, let me show you exactly what I'm talking about. I like to show with picture references, if you haven't noticed. I hate just saying words and not giving you all something to think about. Okay, so this is peak formation high, peak formation low, consolidation in the middle. This is exactly what I'm looking for. Rectangles being built. So at the end of the day, a lot of times you'll receive these end-of-day consolidations and then breakouts. And then usually around base 3 or base 4 is where you'll get your ascending channel to go vertical. I'm not counting the bases. That's certainly not what I'm trying to do. I'm just looking at the consolidations and looking at the rectangles and deciding whether or not they continue to break out higher or lower. And just, looking at the pattern to observe and see if that is the template that I'm receiving. So right now, I have peak formation high, peak formation low, rectangles down low, and an ascension, breakouts of those rectangles. Are we going to get the squeeze pattern or some kind of channel to go higher? That is my thought process and why. So again, if they work the high of the day and break down, then obviously that's not working out. If it continues to break out, though, and pull back, we'll see. All right, day one. Today's day 2 of the cycle, but I'm looking at mainly the opening range, initial balance, peak formation high, peak formation low. We've broken down, we pulled back up. Also, this template does remind me of another one. Y'all are probably getting really tired of me pulling up all these PDFs, or maybe it's helping. Who knows? Hopefully the second one. Unless the breakout fails on a Wednesday, it's kind of what I'm thinking, right? So this breakdown, we start getting some rectangles, peak high, peak low, consolidation. We start pumping it back up to go vertical. Where'd the other one go? Oh, no. Cameron. Nope, I've missed it. It's back up here. Yeah, awkward silence. Where's this one go? Here it is. Peak formation high, breaks down on the following day. So notice how it closed on the outside. It could have closed slightly on the inside, but the fact that we started making lower lows and lower highs and breaking down to go back towards the other side of the range, that's the thought process here. Is we've broken down, we closed back up on the inside of the range. Could have closed outside the range. Asia consolidates and starts making higher highs and higher lows. Yep, we got news at 8:30. So we'll see. If it continues to pump up like this, then great. The playbook is on the boot camp. It's part of the boot camp. Of course, I show it here on YouTube all the time. There's a lot more that goes into the boot camp than just that playbook. But the playbook is kind of like the cherry on top. But I show it here on YouTube all the time. So if you want to just grab it from here, great. Let's see. Okay, I think that's a pretty good explanation of why. I've shown the template. I've shown the current day's pattern. I've also given a reason to not go long and a reason for why it would go back the other way. If it breaks down, starts making lower lows and lower highs. All right. Let's go to gold. All right, so gold yesterday, first red day. Very large breakout day. So this is actually all of my, going into the session yesterday. And I actually posted this in Discord as well. We had this opening range, not even opening range, but just Fridays. We had a breakout close on Monday. very wide range, opening range. And then coming into the New York session, this is the details that I had listed out. Day one breakouts. Is the breakout going to succeed or is it going to fail? If we're just working the low of the day, maybe we've made a higher high. You know, maybe that's what's going to happen. Maybe we'll get a short squeeze or something like that. All right. And then we get the New York session. They make the higher high and pull back to the close. Okay. So really no trade yesterday. I was watching gold and I was watching, I think it was oil yesterday. Those were really the only pairs that I was watching, and neither of them really performed the way that I wanted to. So I didn't trade them. Opening range break or breakout day, breakout close. Now we have peak formation high, peak formation low. Was this a first green day? Yes, it was. So at the close of the day, we can now say, hey, this was a first green day. We got a first red, immediately followed by a first green. It didn't want to stay up there. Nice. Okay, first green day. Day one of the cycle, we got a reset. That was my fault. Okay, we get day one of the cycle and a reset. That leads us into today. So after a day one and also first green day, you know, what am I looking for? I want to see a higher high on the inside. So we had a lower low, higher high, pull back to yesterday's close from Monday. And then now today, what do I want to be seeing? I would like to see higher high, low of day trade. Well, we're definitely not the low of the day. So my big levels to be watching are going to be this one here. And this one here. High of the current day and the high of the previous day, because we're in breakout pullback. Yep, exactly, Sam. Good stuff. Right, so I've got this breakout level. For example, a reoccurring trade setup for me would be timing that work the high of the day and break down. Maybe we're going to go back for the breakout level. That's a reoccurring setup. Higher high, stop hunt to the low. Breakout, higher high. Pull back to the breakout level. Short squeeze. Now, it's 8:30 in the morning, so it's kind of... I have no idea what that means, Joseph, but I didn't expect that. It's funny. I think that's all I can do on this. First green. Ideal setup would have been from the low of the day, but we're not at the low of the day, so I can still watch and see how it develops at the high of the day. What are the weeks of breakouts doing? Okay, last week was week one breakout to the upside. And they've came back down once, twice, and a third time. Made that higher high, and it looks like maybe we're squeezing to go back up. Push one, push two, push three into the low of the current week after breakout week one. Now we have a first green day. So you can kind of see how things are developing in my little brain here. Week one breakouts to the upside. 3 pushes back down over the course of 3 days. Push 1, push 2, push 3. First green day, day 1, day 2, day 3. I like it more. Okay, that's gold. That's my thoughts. I think gold is going to be at the top of my list. I really like oil as well. This dump down, peak high, peak low, whatever trade that I find today on this looks like it could be pretty good template wise. All of the indexes are a little tough for me to read. And that usually means that I should just stay away from them. So I think gold and oil are going to remain my go-tos. There was just news as well. Cam, would you fast check US 30? FOMC week. Is FOMC today? No, I'm not seeing it. Oh, that was the yeah, for the minutes. But it's also a holiday week. And yeah, there's news at 10:30 as well for oil. Yeah, that was just for the minutes. And then it is a holiday week, which is probably going to affect things, but shouldn't affect anything. Hopefully not for today. All right. Is there any pairs that you all would like me to go over? Pound yen. Let's go take a look at the pound yen. You said there's 5 days of breakouts and no retracement, so an extended run to one side. Okay, Monday opening range for the week was an inside day. Man, all these lines are freaking me out. Monday was the opening range for the week and an inside day. Breakout, breakout, and breakout. So there is at least 3 days of breakout. Good. Okay, and then opening range breakout. Asia makes a lower low. There was no pullback in London, but we're pulling back now into New York. So this is an interesting way of moving the market. Every time that they go lower, there's one candle in between. So what I'm doing right now is this is the last place that they pulled back. They made this lower high. Pulls down. Okay, so this is a lower high here. But after this lower high was made, every other time that they went back up, it was just a 1 bar or 2 bar inside of a 1 bar range. So there is no pullback until all the way down here. So this is the last time that they made a lower high. It was in London. This market's breaking out to the downside, lower lows and lower highs. That's all I got to say about it. We've pumped back up. Personally, if I was going to trade this, I would look for a 3 push pattern back up because this is a break. This is all one leg down, and they've pulled back. And if that doesn't happen, then I just wouldn't take it. But anyways, say gold. I think gold was the last one I just did, right? Yep. So we had a first red day. Then we get a first green day. It's week 1 breakouts going to the upside. We pumped it back up. I'm going to watch and see what happens at 9:30, but this is... We'll see. Say Bitcoin. Oh, we're not at 100,000 anymore. Look at that. It's up there, though. I think these were the notes that we had. Yeah, these were the notes that we had from the last stream. 3 days of breakouts. Got the lower low and the dump on the next day. Monday. Opening range. Opening range breakout. So I would be looking for Asia to make a lower low, London to pull back, and New York to continue the trade. But instead, Asia starts pumping back up, and we're making higher highs and higher lows. But this is quite the range here. This is all on the inside. Day 1 down, day 2 down. No first red, no first green. 2 days of breakouts. Weekly template, opening range breakout. Yep, that's really it. So you see the pound. I'm guessing pound dollar. Yep, same. It's very similar to a lot of the indexes. Peak formation low, peak formation high, outside day, pulls back up on the inside. This is beautiful for anybody that trades the London session. Peak low, peak high, consolidation in the middle, and a breakout. It was a good London trade. Coming off the low of the day. Going back for the previous day's high. All right, if you all don't have any other pairs, hopefully this has been useful to you all. I appreciate you all being here and participating, and hope you all have a great weekend. Great rest of your week. Great holidays for my my U.S. livers. And I'll have a video coming out this weekend, which I'm finishing up today. All right. You all have a great rest of your day. I'll see you in the next video. I will not be doing a live stream on Friday, but I will be putting out a video on Friday instead because I will be with family. You all enjoy the rest of your week. Bye-bye.